This is Alan Bush with ADMIS. In the stock index futures, we did see futures under a little pressure in the overnight trade. This after the European Union predicting that economic growth in the Eurozone will be weaker next year than what they had predicted last May. Also, we did have the ISM non-manufacturing index coming in stronger than expected. Normally that would be bullish for stock index futures, but currently anything that suggests that the economy is getting a little bit better could influence the Fed to taper their quantitative easing program a little bit earlier than analysts had expected. So that is putting pressure on stock index futures currently. However, we do have the QE in place. We have the Fed funds rate at 0 to 25 basis points, which is unlikely to be increased anytime soon. So the very accommodative Fed is likely to cause a recovery in stock index futures this afternoon in spite of this report that has caused this market to come under some pressure early. Over in the foreign currencies, seeing the euro currency lower, this after the European Union basically downgrading their estimates for EU growth. We do have the ECB meeting on November 8th. There's a possibility that they could lower interest rates at that meeting. So we're thinking that once that meeting is out of the way, we'll see a recovery in the euro currency and also a new leg down in the dollar index. So that is the pivotal timing, November 8th for the ECB meeting. So once that's out of the way, I would expect these trends that we're seeing in some of the currencies to reverse. Also, we had the Reserve Bank of Australia leaving interest rate policies unchanged. They currently have their key interest rate at 2.5%, which is a record low. Also, we are seeing the Australian dollar holding up relatively well, even though the RBA attempted to talk down the value of the Australian dollar. Also, some good gains in the British pound. This after the UK services industry coming in at its best level in 16 years. So the pound continues to do much better than the euro currency, and I think that is a trend that will probably continue. Also, with the ISM non-manufacturing index coming in better than anticipated today, pressure in the treasuries, taking out the low that was made on October 21st. So some sell stops hit, but I think this is probably enough on the downside now, especially with all of the Fed's accommodations still in place in all of the treasuries and mortgage-backed securities that the Fed is buying. I would expect a recovery this afternoon in treasury futures. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.